Good morning and welcome to Boardroom Media. My name's Andrew Musgrave and I'm joined here today with Peter McGuire, CEO of XM Markets. Pete, welcome back to Boardroom Media. Good to have you back.
Lovely to be here, Andrew.
Now, it's been a few months since we last spoke. A lot of activity in the global markets, particularly what's happening in the Ukraine, and we'll touch on that a little bit later. But I think stick to domestic issues.
Yes.
The RBA board meeting is today. Obviously, they will raise interest rates. The question is 25, 50 or 75 basis points. They're probably looking to go relatively aggressive, but there's a bit of a fine balancing act now with controlling inflation, but not tipping the economy over either. So what are your thoughts?
Absolutely. Well, I think exactly right. Front loading, and that's what all the analysts are saying, really maybe a 50 or a 75, the big chance of it. And if you front load too heavily, and if we were, say, we had, a successive one percentage point move, for over a couple of months, it'd be too aggressive for the market. We've got to worry about the recessionary fears globally, stagflation. But the central banks, you look at the Philippines in our zone, South Korea, all doing the same this week. So it's going to be a very much, pedal to the metal, and let's just see how aggressive the Fed is. Let's see how aggressive our RBA is. And it's going to be a good month to trade.
Certainly is. Now, and I guess that's the question at the moment is, obviously, if you go back only probably 3 weeks, all the talk was about in the surging inflation and how to get that under control.
Absolutely.
And in that period, that is still a concern, obviously, but we're now moving to, we don't want to go too hard because the recession is now coming to the fore. We've seen the US 10-year come off a little bit on the back of that. So, yeah, it'll be an interesting time. I think also with the global markets, the US, they're bound to potentially go another 75 points. So what are your views on that one?
Well, I think exactly right. I listened to Fed Chair Powell. We've got the minutes coming out Wednesday evening, and it's going to be an interesting week with non-farm payrolls Friday. So as far as we had July 4 yesterday, the markets were closed, Independence Day. I think the overall theme, we're going to worry about how supply chains are, how foreign sales are, and the domestic economy within the states itself, with the equity markets having a shocking 6 months. Is this 6 months going to be better than the last 6 months? The jury's out. US dollar has been reigning supreme as far as king dollar. So it's just an interesting storyline. We are, as you mentioned, Ukraine, we're worried about oil prices and the inflationary, talk of the town. So I think it's going to be a fascinating time for traders. Again, equity markets, currencies and commodities.
And in the Eurozone, do you think the ECB have got a better handle on things compared to, say, the Fed?
I don't know necessarily, because you've got inflation. I was speaking to Greece yesterday. We do breakfast shows out of Europe. And one of the hosts was in Greece. I saw that inflation's over 12.5% in Greece now. So it's just out of control. And they're trying to rein it in. We've got Lagarde hitting it up 25 basis points on the 21st of the month. So are they too far behind the line? So they may have to front load very aggressively Eurozone to try and match the Fed and, of course, what Asia's doing.
Yeah. And I think that's a fair point. So it's like we said earlier, it's a bit of a balancing act at the moment. So,
yes.
But I think also what we had out of the States recently is the stress test on the banks to see how they perform in pretty dire situation. Yeah, and they all actually, by the looks of it, came out pretty well.
Yes, they did. They certainly did. There were 3 metrics as far as the inputs: 10% unemployment, 40% sell-off as far as commercial property, and 55% correction to the downside for their equity market. So you can imagine if those 3 materialise, we'd all be looking for jobs. It'd be a depression on the main street, but they say that the banks can withstand that. So that's a good sign, Andrew.
Yeah. And there's I read a report only a week or so ago out of Bank of America basically saying, and they're obviously probably the biggest retail bank in the States, saying their customers have never had more money in their bank at the moment. So it's an interesting situation where you got the inflation, the sort of, I guess, a threat of a recession, but as you say, Main Street is probably much better prepared than they were, say, at the GFC.
Well, that took us all by surprise, the GFC. So yes, this time round, through government stimulation, the COVID, people are less spending as far as restaurants or going out. It's not good for restaurant owners, of course. And all of those conditions, I think, buttressing the the firepower of, and they've got their powder dry, Main Street. So they're looking for bargains, they're looking for opportunities, and it's going to be, again, how that all plays out on the domestic scene in the States.
That'll be interesting because it's obviously equity markets tend to look sort of 3 to 6 months ahead. So it'll be interesting. Have we hit that bottom yet? That's obviously unknown. But I think there'll be people looking particularly at some of those tech stocks which have been sold off significantly, not the ones that don't make any money, the ones that make significant amount of money. There's probably some pretty good buying opportunities either now
or there will be shortly.
Pretty soon, so on the back of that. Now, obviously, we've got some stats coming out, as we said, the RBA non-farm payrolls. If there's anything of interest other than that this week?
I think I'm interested to see how non-farm payrolls report on Friday, because I think that they're going to be not as rosy a picture as what we experienced in May. So that June number is up until the middle of June. They're saying it'll be a contraction compared to what we saw in May. So I just want that number to drop. But I've seen so many different reports over the last 2 years as far as the non-farm payroll. Analysts are saying it'll be 500,000, all of a sudden it's 900,000, or it's 200,000, they say 400. So it's very, very hard to try and draw a line in the sand where value is and where the opportunity to trade off it. So at the moment, I'm just waiting for that data to drop.
And obviously there's some data contradicts as well. So
of course.
It's a pretty interesting time at the moment. So we'll just touch on the currencies. Obviously, US dollar,
king dollar,
the king, obviously. How are you seeing the Aussie at the moment? It's obviously under a little bit of pressure, but it'll be interesting to see how it performs after today.
Yeah, well, it may bounce, and if that depends on, again, what our RBA chief does. So if they hit it up 75 points, I think that would underpin the Aussie. You might see it ratchet up a cent and a half very quickly. So there's the first point. King dollar's at 105 for the US dollar index. The Aussie's at 68 odd. Where it's trading. It may bounce to 70. We're going to worry about what happens as far as China, of course. And the overall momentum has been softness because of King dollar. Yen's at, I think, what we've seen, 17 or 18% down in the last 6 months. Pound nearly at 120. And we've got, Andrew, the most important one I'm looking at, euro nearly approaching parity to the dollar. So that really is a wake-up call for all of Eurozone. If you've got American dollars in your bank and you want to travel, now's the time to do it.
No, well, that's the thing. And I think, obviously, Eurozone's a different beast to itself, managing all those different economies. So,
of course.
That's interesting. I think we might just touch on the commodities just quickly before we finish up. Oil, obviously, it's still very high, but it's come off a little bit.
Come off a bit.
But there's still pressure there.
Yeah, exactly. What it's seen, we've seen big range trading from 123, 124 down to 107s, 108s for Brent, back at around 113, 114 now. WTI, West Texas Intermediates at 110. It's just a big volatility play. They've got massive whipsawing, and that's giving traders a great time to be involved in it.
Yes.
I've seen iron ore come under massive pressure to the downside, copper being spanked down, aluminium, a lot of the base metals, ferrous metals have been hemorrhaged very hard. So I think that there's the only one really standing united at the moment is the oil market. And if we saw that come back, to $70 or $80 a barrel, then that's going to take a lot of heat out of that inflation story.
Yeah, definitely. Which then, if you're looking sort of further ahead into 2023, and the way the feeling in the market at the moment, the back end of 23, we could be looking at a decrease in interest rates.
Absolutely. Well, I saw that Fed Chair Powell, and they say the same thing here in Australia. The third quarter of 23, you'll start to see them take some steam out of the interest rate market.
Yeah, well, it's it's a chance, especially if they go hard over the coming months.
Yeah, front load,
and then it gives them that, I guess, a bit of breathing space to, if they need to drop rates, they can, sort of thing. So
exactly.
Whether or not that's the thinking, who knows? I think finally, obviously, the ongoing sort of turmoil in Eastern Europe with Ukraine and Russia. Thoughts on, obviously, we don't know how that will play out or end, but how that's going to, does the market eventually become a bit immune to all of that?
I think it does. I think it has it's turned a little bit of a deaf ear because of the hurt on Main Street with inflation globally. The second point is Russia seems to be galloping ahead as far as the ruble strength against the US dollar. It's coming under, very, very strong. Putin's now saying he wants to be paid in gold or ruble for not only his oil and his exports as energy, but now for crops. So this is going to be a fascinating how that all plays out. And the BRICS. The last point I want to mention is keep an eye on the BRICS++. Everyone used to talk about OPEC+. Well, there's also a new player in town called Brazil, Russia, India, and China. And you put the plus sign to them. Who else is joining the ban? So there's a few more, and it's going to be, again, an incredible 6 to 12 months to watch it, play out and observe.
Yeah, no doubt. So obviously we've had plenty of volatility in the last 3 months. Plenty in the coming months ahead.
Yeah.
But, plenty to talk about. Very much so. Plenty to talk about. But Pete, great to have you back on board. And we'll catch up again next week for the XM Weekly Update.
Look forward to it, Andrew.
Great.
Thank you again.
Thanks, Pete.
Cheers.